Hello everyone. Now let us see how to compute the business income of this particular problem. Let me repeat the format. First of all, you have to take the net profit or the net loss has been shown in the profit and loss account. Then you have to add the inadmissible expenses. Then you have to less the expenses allowed but not debited. Then you have to less the income not taxable under this head. Then after that you'll find, okay, you'll get the taxable business income. So now under this problem, you know that the net profit is 1,90,000. Then you have to add back the inadmissible expenses. So now let's look at the debit side of the profit and loss account. So the first item will be the advertisement expenses, which has been paid in cash and above, okay, in excess of rupees 10,000. Then we'll have the drawings by the proprietor. Then we'll have the interest on proprietor's capital. Then with regards to repair, if you look at point number 3 of the adjustment, it says half of the repair expenses were on let out building. So it means that out of this 2,500, half of it will be an inadmissible expenses because it has been used for repair of a let out building. Then now we also have the legal expenses. Now if you look at point number 2, it says that rupees 3,000 were spent on purchase of land and are included in legal expenses. So purchase of land is a capital expenditure. So out of the total legal expenses of rupees 5,000, 3,000 will be an inadmissible expenses. Then we also have depreciation. Then we have the bonus to the proprietors. Then we have the car purchase. Then we have donations, and we also have the provision for bad debts. Now with regards to GST, now to see that GST is due and paid on 1/7/2090. So since GST has been paid on the due date of filing of return, so it'll be an allowable expenses. Then in the case of bonus also, if you look at point number 5, says bonus was paid to employees on 30th/6/2020 and date of filing of return is 31st/7/2020. So since this bonus has been paid before the filing of return, it will be an allowable expenses. Now if you look at the credit side to find out the income which are not taxable under this head. So now if you look at the credit side, you'll have the interest on securities and you also have income from house property. Let's look at the solution as been shown here. So it says computation of business income of a cycle manufacturer. So you have to take first of all the profit as given the profit and loss account, that is 1,90,000. Then you have to add back all the inadmissible expenses. So we have drawings, we have interest on proprietor's capital, then we have the bonus to proprietors, then we have the car purchase, we have donation, we have provision for bad debts, then we have the legal charges, that is for the purchase of land for rupees 3,000. You have the repairs on let out building, then you have the depreciation, we have the advertisement expenses paid in cash, and after adding that we'll get 3,48,250. Then you have to less the income to be treated under separated, that is the income which are not taxable under this head. So first of all, interest on security, that's 14,000. You have the income from house property, that's 25,000. So if you less that, you'll get 3,09,250. Then you have to less the allowable depreciation or the expenses allowed but not debited. So we'll have depreciation which has been calculated as per the act. That is from point number 4, it says depreciation allowable on all assets including car is 14,400. So this will be less from the net profit. So after deducting that one, you'll get 2,94,850.